G'day mate, how you going? Today I'm going to show you a little bit of Betfair trading, Australian style, on Australian Greyhound markets. And considering how the world is at the moment with gambling, there are no markets around the planet at the moment basically. So I'm going to help you out and show you how to trade a little bit of Australian Greyhound racing. Now, the first thing we want to observe here is the lack of liquidity in the market. Liquidity meaning liquid money. And because we have no liquid money in the market basically, for bigger bets, we're going to need the bookmaker to help us out to match some bets. It would be different if you were in Britain or we had bigger markets and you could trade straight out on Betfair, but at the moment, with these Greyhound markets and the lack of liquidity, you're going to need help from the bookmakers, mate. It's as simple as that. And all these drum bots around the world that YouTube match betting and all this riffraff, they want you to believe that you're in a war with the bookies or some shit, it's you against the bookies, when simply that's not the case. Now we're all here to make money. I'm here to make money, you're here to make money, the bookmakers are here to make money, and Betfair is here to make money. And if we all work together, we can all make some money. Now why I picked this market out is because the volatility, or I call it market violence, where the prices just fluctuate that much, it's absolutely ridiculous. Now let's observe the dog cash point here. Its back price on Betfair is at 38, its lay price is at 60, and you can back it at the bookmaker at boosted odds for $51 at the moment. In these low liquid markets, what I look for on Betfair is, when I'm trying to obtain a good lay price, I don't necessarily look at the lay price all the time. What I look at is where the back price is, because that's where the lay price could drop to very rapidly when there's no liquidity around to hold prices at bay. Lesson 1 when matching bets: you always back at the bookmaker first, like I am. Get your bet on at the bookmaker and then get your bet on Betfair, because the bookmaker could knock you back. He plays all sorts of games, so don't trust the bookmaker and get your bet on first with him and then match it on Betfair second. So you just seen me back cash point at Unibet for odds of 41, and I laid it at Betfair for 31. So that's a 10-point difference in the odds which I've gained. If you times 10 by 20, that's $200. So if cash point wins the race, I win $200. If cash point does not win the race, I will break even and not win and not lose no money, breaking even. Now the reason I picked out a Greyhound market to show you rather than a horse racing market is because the trends are that easy to observe. Now the general trend you want to observe in low liquidity Greyhound markets is that everybody offering back and lay prices is trying to rip you off. So when trying to obtain a good lay price, what we want to do is look for that lay price to drop down near the back price when the back price has no value in it. For all you noobs that don't know what I just did was I backed cash point at higher odds at Unibet at the bookmaker than what I laid it at Betfair. And when you follow this simple principle, that's when the cash starts flowing, when you get the results that you're after. Now this is a good example because the trends that I've been talking about happen again and again in this market. And I'll get a second crack at the cherry here, where usually you'll only get one shot most of the time, 99% of the time, but on this occasion I get to back it twice, which is pretty cool. So I'm going to be able to get $40 worth of odds separation now, and I think I'll end up backing it at average odds of 36 for a stake of 40 at Unibet, and I would have laid it for odds of 26 for a stake of 40 plus Betfair's percentage. So what's 40 times 10? $400 if Cash Point wins the race, and if Cash Point does not win the race, I will break even. Now this has been a great example of a low liquidity market where there is opportunity. Everybody says you have to have lots of liquidity, you know, for opportunity to be there, but that's simply not the case. You know, there's characteristics you can identify in each different type of market where you can make money, whether it be low liquidity or high liquidity. These low liquidity markets thrash about violently in those moments of truth, and it's in those moments of truth you can pounce.
270 Axel Whelan, Pirates cuts out to 650. Peter Crop, the only other one under double figures here at $7. And the last of them being locked away here, Axel Whelan and Kingsbury Jess out wide. The green light is on. Final leg of the quaddie, race 8 from Grafton. Bunny set into motion, they're set for a break. Racing, Peter Crop missed it, best out, Pirates cut, showing pace between runners as Copperhead Rogue wide of those Aurora, Charlotte, Axel Whelan. Next was Kingsbury Jess and Cash Point to the tail. He put the afterburners on and shot clear. Copperhead Rogue put 2 or 3 on Pirates cut. Behind those runners, Peter Crop, no Axel Whelan into the straight. Copperhead Rogue's clear. Copperhead Rogue too classy. Beats Pirates cut, late for third. Cash Point flying home in front of Peter Crop. A big break then back to Axel Whelan, followed by Kingsbury Jess and Aurora Charlotte's the tail ender.
2, 3, 7 and 1 Copperhead Rogue. The winner 310 and 190. Pirates cut 390 and no third for Cash Point. That's race 8 from Grafton done.
So we didn't win that time, but we nearly did. I heard a guy on YouTube involved in match betting say it's not the opportunities that hit all the time that pay off well. It's the opportunities that hit some of the time that pay off well. And this is an example of one of those opportunities. $400 if Cash Point had have won the race, and we break even with any other result. You can't complain about that. That's stealing money from the market, mate. I suppose the proper term would be stealing value from the market. What was the back price on Cash Point? It would have been up to 30s, 40s, 50s, you know. Or was that on Unibet up to 60s? And it was quite obvious that Cash Point would have won more than 1 in 60 races had that race have been run 60 times. So that's what you call a value bet, and that's how you identify value bets as well when you're not match betting and you just want to gamble and back a winner, I suppose. Now that dog Cash Point was a strong dog. You know, it was a good dog. If that dog got a run, that would have come first by lengths. Did you see the bad run it had? Went wide most of the track, come and flew home third, had more pace than any other dog hitting the finish line. Now that's how you identify a value bet. Now Betfair's call to fame is that if you want to back something to win on Betfair, 99% of the time they have higher prices than the bookmaker. So when you see Betfair's back and lay prices go underneath what the bookmaker is offering, that's when you have identified a match bet or a value bet. Oh yeah, now the critics are going to turn around and they're going to say, oh well, you didn't win, man, what was the fucking point of that? Well, the point of it was we give ourselves a possibility to win. And if you want to see some winners, I will show you some winners very soon. I've won lots of money doing this recently. It's a pretty easy concept to get your head around, and it's based on mathematical principles, mate. If there's one thing that doesn't lie in this world, it's maths. Now all you Poms and Pomgolians out there, I'm going to make a video that'll make you jizz in your pants about Cheltenham. It's a pretty good video. I made a bit of money on it, and a good trade. Anyway, I'm out. See you next video. Like and sub and get fucked. Cheers, mate. Bye.